But yeah, I'm going to be going over with this model with you guys today. Accumulation manipulation distribution, AMD, aka power of 3, and we're going to be running it on the NQ today, the NASDAQ. I'm actually going to use the 1 minute time frame for you guys today to show the scalpers in the group some potential strategies to look at. But also just want to make a note, like obviously price is fractal with pretty much any of these strategies, so you could apply this to other time frames, 5 minute, 15 minute, 1 hour, even higher time frames. And often also see some people try to apply this kind of price structure idea within sessions as well. Like maybe you'll see kind of AMD between London, New York, and Asia, or Asia, London, and New York. So you can also kind of look at it, on higher time frames as well, but we're going to be focused on lower time frames just for today, just to have some fun on the 1 minute. So digging into it, and feel free to ask any questions at any point. If there's anything that's unclear, or you need me to kind of clarify why I put a drawing on the chart where I did, or anything like that, feel free to ask any questions. But basically, very simple. Without getting into crazy. ICT has these hours and hours and hours long videos, but just to distill this down really simply, all we're looking for with this strategy is kind of a consolidation or accumulation phase. You'll kind of see with these candles here, just kind of price chopping around in an area, kind of consolidating, not really trending in either direction, followed by a kind of reversion out of the accumulation zone and right back into it. That's kind of called this manipulation leg. So you want to see like a pretty quick out and back in for that manipulation leg. And then oftentimes you'll kind of see a distribution following. So essentially, from like smart money concepts point of view, this is often like kind of the the retail sweep or whatever that you hear, kind of getting people, the big players, kind of getting into their positions before price reverting to the other side. And I did want to kind of mention that we can see both continuations and reversals with the strategy. So I have a example here I'm going to show you guys in a little bit, but I'll kind of show you what I mean. So we could have price, let me kind of map this out. We can have obviously price kind of trending up here. We can have kind of a consolidation here, accumulation, manipulation, and distribution for what I would say like is a continuation move, or vice versa. We could be kind of in an uptrend, price consolidates, we get our manipulation, and then see a reversal to the downside. So we're going to have both continuations and reversals, and it's honestly not too dissimilar to the unicorn model that we tested a few weeks ago. If you guys don't remember, that was based more on like a price structure like this, where you kind of looked for a kind of higher extreme and then a reversal, or and it could work for continuations or reversals as well. So it's kind of a variation of the unicorn model, I would say, where instead of looking for this specific price structure, we're going to be looking for accumulation, manipulation, and distribution more specifically. But I would say they're kind of similar outcomes, and so you could potentially use them somewhat interchangeably. The entry model is just going to be a little bit different. So in terms of the kind of take profits for this, what I saw from most of the videos I looked at was, again, similar to the unicorn model. You would kind of take the standard deviation of the manipulation leg, so whatever, in this case, the high kind of before the manipulation happened, the high to the low, you kind of take the standard deviation of that with your fib retracement tool and kind of map out the 2 standard deviation and 4 standard deviations were kind of the main ones to look for. Generally, you will kind of see price go to the 2.5, and then maybe it stops there, but oftentimes it will go all the way to the 4 standard deviations. Might just take a little bit longer. So we'll be using both of those levels in a couple different instances. And then for our entry models, there's actually 2 that I'm going to use today for you guys. The first one is something I haven't shared with you on these streams, so again, feel free to ask any questions. But basically, it's going to be an inverse fair value gap retracement. So essentially what an inverse fair value gap is just a fair value gap that fails. You expect when price is coming down here that if price is going to continue to the downside, you'll see wicks into this zone, and then price failed to break higher, it'll kind of continue to the downside. But in this case, we got a candle close above this fair value gap, so this is what we would call an inverse fair value gap. It's kind of similar to the concept of a breaker, which is essentially a failed order block. So we're going to be looking for, during these manipulation legs, if you see a fair value gap that then is followed by a candle that closes past it, we're going to use that inverse fair value gap as our entry. And just for simplicity, going to use the kind of higher low of the manipulation leg for the stop loss. And take profit is going to be either the 2 or the 4 standard deviations. I want to get at least 2R. So if I'm able to get that at the 2 standard deviations, that's what we'll use for our take profits. If not, then I'll aim for the 4R. That's what we're going to use for today. Again, a lot of opportunities for optimizations and things like that. But just for simplicity, that's going to be kind of the first model, entry model. And then the second one is essentially what they call a box setup. And it's going to be in cases where there's not a fair value gap. We'll use this one. So basically, as you can see here, we've got an accumulation phase, manipulation, and once price closes back above, this, I guess, kind of returns to the accumulation phase. If there aren't any clear fair value gaps, kind of, I guess, inverse fair value gaps that happens during the manipulation phase, then we will just enter on kind of a retest of the low, in this case, of the accumulation range. So just kind of a range retest, essentially. Once we've reclaimed the range, we test it. So this is kind of the low of this accumulation. And similarly, we'll use the kind of low of the manipulation leg and target either the 2 or 4 standard deviations, depending on what can get us at least 2R. So let me know if there's any questions on those, but we're going to use both. And like I said, if there's not the fair value gaps, then we'll go ahead and use the box setups, but we'll kind of look for both of these today. A couple of notes I wanted to share. Obviously, with this model, something I saw is maybe if you're on a trading New York session and you've already seen, okay, the manipulation already happened, like pre-market or something like that, you can look for continuation models to trade this distribution phase. But for today, I'm going to be focusing really specifically on trying to trade this manipulation phase. However, there are opportunities, to look for longs in a continuation. You can see in this example, there's a nice fair value gap right here that you could have taken long, different things like that. Or obviously on lower time frames, you can look for another AMD for the continuation too. And then things to potentially consider for increasing your win rate with this strategy. If you're trading a reversal, maybe you only want to take these if there was a high time frame liquidity sweep, such as a previous session higher low, a previous day higher low, previous week higher low, because often you will see reactions to those kind of time-based liquidity levels. For continuations, maybe you only want to take trades that line up with the higher time frame trend to give you higher kind of probability for those. And then obviously, lastly, you could potentially stack this model with multiple time frames. If you see a high time frame AMD and then try to zoom in and see kind of similar one on the lower time frame, that would obviously add additional confluence. But to keep things simple today, I'm just going to be looking really strictly at the price action and just trying to identify the kind of triggers we looked at. As always, a lot of different optimization considerations. Where do you place your stop loss? Do you want it at the higher low of the kind of bodies instead of the wicks? Maybe, I'll show you guys this kind of example right here. Oops. Go back to this. So in this case, obviously you could use the wicks, you could use the stop loss, or maybe you want to use like a more recent local higher low. Like you can play around with a lot of different things with your stop loss to increase your risk to reward. But this is like I said, a lot of stuff you can do with optimizations after you initially run the back test, and I've got another video on that. Similarly with take profits, do we want to get at least 2R, or maybe we want to get at least 3R? Should we consider using a trailing stop loss instead of just a fixed take profits? Do we trim at any point, auto break even at any point? These are a lot of different things you can take into consideration to really optimize your strategy once you've got kind of the base sample size. So let me know if there's any questions, but if not, we'll kind of dive right in it. And just real quick, kind of get you guys caught up on everything that I've updated here. I've saved out, I created a new session in FX Replay. I've saved out a new layout specific to this back test. And I've got a few favorites saved out that I also made some different templates. So I'm going to be using this rectangle tool for our 3 phases, and you can kind of color it however you want. And the nice thing is you can save these different templates and kind of, so we'll be switching between kind of the 3 phases with that. And similarly with the fib retracement tool, I've kind of got this thing here. I'll draw it so you can see better. I've got this drawn out so we can really only see the levels we care about, the 0, 1, 2, and 4. And all I did was come in here, kind of removed all the other levels. Then I think I also turned off the background and the trend line. So I'm really only seeing these levels to keep our charts as clean as possible. So I started this like early February of this year, I think. And so we're kind of coming into New York session here. And so let's go ahead and get it started. So we've kind of been in a downtrend for a while, and I am starting already to see a potential accumulation phase here. So you can see, and I did want to mention too, the accumulation phase in the video, he generally would use the bodies of the candles for this instead of wicks, just to kind of keep things simpler. So that's what I'll be using for this. So we're seeing a period of accumulation here. Let's see if we can get a manipulation above or below it, kind of early New York session. All right, so that's exactly what we wanted to look for. So really it took a few candles, but you can see right here we have a closure below this accumulation phase. So that would be a potential manipulation. And if you look closely here, we have a inverted fair value gap as well. So between this red candle, there were no overlapping wicks before or after it. And we saw a candle closure above this fair value gap, which inverted it essentially. So we'll be using entry trigger number 1 in this case, a basically fair value gap retracements. And let me kind of draw off the manipulation leg was basically this high to this low. So this kind of gives us our standard deviation projections. And I can place the long tool kind of at the retest of this fair value gap, this inverted fair value gap. And like I said, if we can get at least 2R at the 2 standard deviations, that's what we'll go for. So I can get 2.31 with that. And yeah, we'll be using a couple different tags. I'll show you guys as well. So in your account settings, there's a journals tab that you can add different tags. So we'll be using those. This is going to be entry trigger number 1. And I'm also going to try to differentiate reversals versus continuations for this, because I think it would be interesting to look at the analytics for that over time. But we're using buy limit for this. We're basically looking to enter when it retests this level, so that's going to be a buy limit. I like to use 1% of the initial balance, so that's going to be what I'm using, and not going to be using auto break even or anything like that. So that should be all we need for this. So I'll click place order, and then see how this one plays out. So pretty much immediately tagged our target. And I'll go ahead and draw the manipulation distribution so you guys can see that too. So if you put the rectangle on chart, you can just use this template tool and change it to kind of the 3 different phases here. And then this would be our distribution, template distribution. Perfect. So as you can see, just review, we got accumulation, manipulation, and distribution to the upside. Potentially could come up to this for standard deviations, but for today, I'm just going to look for whatever gives us at least 2R. So we at least get some decent profits from the move. So we got plenty of time left in New York session. It's going to let things play out a little bit. Starting to see some potential accumulation here. I'll kind of mark this out just to see how it looks after a little more price action. So accumulation, price kind of chopping sideways for a while. Let's see if we break either way out of it. All right. Okay. So right here, we have and I'll kind of make this line it up with the bodies of this entire. So we have basically a range here. The price is kind of chopping around for about an hour, or about 45 minutes. And then we got a kind of brief manipulation below it, followed by a nice reclaim back into it. And similar to this kind of earlier model, earlier trade, we have an inverse fair value gap here as well. So this, instead of a reversal, this will be a continuation, because we've got price shifting to the upside, and we're hoping for a continuation now for further upside. I actually need to replay back a couple candles, because I basically am looking, as soon as this fair value gap is inverted, that's basically when you're going to place the trade. So I'm going to right click replay to this date, and it'll take me back to where I needed to place the trade. All right, so take the fib retracement for the manipulation leg, and I want to show you guys, this is a small detail that I think is important for this. When you're drawing these manipulation legs, instead of taking like the extreme kind of high to low, I've seen more frequently people use the actual candles. So if you're thinking about like the lower time frames, we obviously like went down, we came back up, we went down, we came up a little bit, and then we went down. And so kind of this high of this green candle essentially is our like ultimate, like what was the high that created the manipulation leg. And you can probably see it better on like the lower time frames. If you go to 30 seconds real quick, you can now see that was our high kind of before the leg down. So that's what he will use for the standard deviation measurement. And then let's see what we need to target for for 2R. I don't think this 2 standard deviation is going to give us 2R, no, 1.91. So for this trade, we're going to go ahead and target the 4 standard deviations at a potential 4.8R trade, which would be pretty cool if we hit. So I'm going to come here, I'll draw the manipulation so you can just see real quick. So potential manipulation, we'll see how it plays out. Manipulation, and we're hoping for distribution, move to the upside, templates, distribution. So I'll place order, I'll click my position tool, place order. Again, it's a buy limit. And tags, this is going to be entry trigger number 1, the fair value gap retracement, and this is going to be a continuation. So a couple different tags, we'll be able to filter our analytics later. So let's get tagged into the trade, and then I'm going to use this nifty tool down here. If you click, once you have a position that's open, you can actually come down here and go to position closed. So this trade did actually take a while to play out, but eventually we did hit our full TP a couple hours later. So really nice trades the first day. Let's see, we've still got more time in this session. Again, 1 minute time frame, you get a lot more trades, but you know, sometimes doesn't work out as well as the higher time frames either. But as I'm kind of seeing this trade concluding, we already have a potential accumulation zone right here. So I'll mark this out. Sorry. So this is a potential accumulation phase, and we have a potential manipulation, but I want to see a quick reversion back into it to really classify this as a... Okay, so this is a great example. Sometimes you'll see potential accumulations, but we don't have any manipulation here. It's just a, you know, we kind of retested this range high and then continued to the upside. So you really have to see both the accumulation and the manipulation kind of out and back in quickly before looking for these trades. Otherwise, you're just kind of hoping that price will do something that it's not showing it's likely to do. So potential trade there that didn't end up being anything. So I'll let things play out a little bit more. We did have a little accumulation here, but not really any accumulation up or down here that I wanted to see. So I don't think we would have had a trade here. And so we can't catch every move of the model, but we'll definitely try to see if we can find some others. So we've got a couple hours left in New York session. Again, had a small accumulation here, but not the price action we want. Again, up here, potential kind of accumulation in this zone, but if we get kind of a quick move to the upside, potentially we could look for a long here. Let's see how price develops shortly after this. Okay, I think I would probably go ahead and take this one around here. So we've been accumulating in this kind of zone right here. We had a rejection. It attempted to kind of continue back off it a couple times, but then we actually did get price closing pretty decently up here with a higher high. So probably at this candle, I would go ahead and attempt the box setup. So we'll go back one candle here and take a look at this. So we've got an accumulation zone here, potential manipulation. We'll call it red for now, just to potentially highlight it. So let's make this red. Or sorry, I've already got the template saved. Template manipulation. And we're hoping for potential distribution. Let's see if we get it. Template distribution. And our low for this was right here. Actually, sorry, we do have an inverse fair value gap again. I just missed it on the first attempt. So on this leg down, we had a fair value gap right here. That's with this candle, we did also invert. So it barely closed above it, but yeah, this is going to still fall under the entry trigger number 1 as the inverse fair value gap. So now that we've consolidated potential manipulation and we now have inverted this fair value gap, we're going to look for a long on a retrace of this fair value gap. So I'll kind of put that entry over there. And in order to map out our take profits, let's look at the manipulation leg. So this one was pretty large. But I would probably say, again, like the kind of the high before that like final low that we got was right here. So it's probably what I'm going to use for the manipulation leg, kind of high to low. What do we get? We only have 0.91 at this 2 standard deviations, so I'm going to have to target the 4 standard deviations for this one. So I'll place the order here, place order. We're going to be using a buy limit again. And let's see, this looks like continuation again. We've kind of been in an uptrend for most of this session, so we're going to be looking for entry trigger 1 and continuation. So let's see how this one plays out. I'm gonna go to the position closed. All right, so this one ended up being a loss. Let's see, we got up 1.73 R, which was above this 2 standard deviations. So as we get a larger sample size, maybe one thing that we can consider with this strategy is going break even after that 2 standard deviation is hit. Could be something that we see over a larger sample size that could be worth doing, but yeah, ultimately price kind of got up here and then struggled to make higher highs here, and ultimately fell down kind of to end. This is like the last little bit of New York session essentially. So if you were trading like futures that you can't hold through the session close, you actually probably would have closed this one about break even, but we'll just let it play out and record the full thing, assuming that you were trading live account and you could hold it through, or or something else. So that's the first day, 2 wins, 1 loss. Now we are in the next day. We've really just kind of consolidated overnight, and this is again where the sessions can also act as the AMD. Like in this case, we pretty much consolidated both Asia and New York session, which does happen quite a bit with indices overnight. We kind of came up and then immediately shot back down, and we even inverted this this fair value gap. Sorry, I need to go back one candle. This could be a good instance where early New York session does kind of chop back and forth, but the first like minute after New York opened, we did technically have a trade here. So if you look at kind of we have a potential manipulation phase here, and we're hoping for distribution. Sorry, I gotta change the color of this one. Template accumulation, and we're hoping this one will be a distribution. So we've kind of chopped back and forth for a while here. We had a move to the upside followed by an inverted fair value gap right here. So you can look for an entry on the retest of the fair value gap, use the high as your stop loss, and what would our take profit be? So the low to the high of this, that would kind of be our levels for the standard deviation, and the 2 standard deviations gives us only 1.9 R, so we would have to target the 4 standard deviations for this one. And I would probably classify this one as a continuation, because price has already broken down here and we're looking for continuation further to the downside. If instead we had just like swept this high, then I would classify this as a reversal, and we may end up doing that before we see the price reverse, but let's go ahead and give this one a shot. So again, it's going to be a sell limit on the retest of the fair value gap. This is going to be entry trigger number 1, the fair value gap retrace, and I'm going to say it's continuation. And let's see how this one plays out. All right, so we got knocked out pretty much pretty shortly after. And again, right when New York opens, you do see a lot of volatility. So again, that could be something. If we see a large enough sample size, maybe it's better to wait, for the first 5-10 minutes on New York open. But also you might be able to catch some really nice trades right at open. You just got to get the larger sample sizes with backtesting to really identify that. But let's see if there's any potentials. Yeah, I'm looking at that as well. So a lot of strategies as well, especially when you're using lower time frames. Maybe you have the right idea, but price just knocks you out one more time before. So I would probably, something I like to do with this specifically is I'll actually add a tag for second attempt, and like any time that I'm considering using a second entry for any strategy, I'll kind of use that tag, and then you can just filter your analytics and really easily see, is it actually worth taking those second trades or not. I don't have that tag tagged into my session right now, but let's go ahead and try this trade. So, well, let's say we have a kind of second manipulation up here that we'll say kind of the theory is still in place, but we're going to take a second stab at this. And so redrawing our fib retracement, the kind of low before the extreme of the manipulation was basically this low to this high. So that's going to be kind of the levels we're looking at. I need to replay back at least one candle here so that I can look for that fair value gap retracement again. So we still have this inverted fair value gap. It's just kind of, it didn't respect it the first time, but let's give it a shot the second time. So we'll use the fair value gap retrace as the entry, the high as our stop loss, and we'll target out definitely the 4 standard deviations in this case. Sorry, I think I lost my drawing. I replayed it too quickly. So I'll redraw the fib retracement real quick. So this low to this high, and then we'll target out 4 standard deviations here for 4.12R. So could catch a nice fit with that if we get it. Place order, we're gonna use a sell limit 1%. Entry trigger number 1, continuation. And again, like if you are testing, if you want to try like 2 attempts for a model, I would highly recommend adding like a second attempt tag or something like that, so you can identify those as well. I haven't added it in my account settings yet, so I can't do that today. So yeah, let's see how this one plays out. Nice, there we go. So I think this is a good example of price often will visit the 2 standard deviations and give you a reaction to the upside, and that's exactly what we saw here. So price kind of tagged this level and then pulled back a little bit. Generally price doesn't go straight up or straight down, so this is kind of a good level to look for that, I guess, like first TP or something. If you were taking partials potentially, you could lock in, at least what you were risking or something at this point. But yeah, I ended up coming all the way to our take profit. So took a couple tries, but this one ended up working out nicely. And then yeah, I would definitely say, so a couple questions in the chat. So would this be a reversal or the liquidity wasn't swept? So the reason I did not consider this a reversal is this high right here. So we technically have already broken structure to the downside. So as you can, if you kind of look at this from a like higher time frame standpoint, we've been in a local uptrend, right? We're kind of generally trending higher, and now we have shifted market structure. We're making lower lows and lower highs. So unless we sweep this high, it's going to be a continuation at this point because we are like already trending down. And if we had swept this high 100%, I would say this is a reversal now. But since it's in line with kind of the more recent price structure of kind of breaking this uptrend, and you can use trend lines and everything too. We had a pretty clear uptrend here. We've broken down from that now. So we are seeing bearish order flow, and so I would say unless we sweep like a local high or something, it would be a continuation at that point. And then yeah, another comment from Rose Train, only 2 re-entries is a good rule of thumb. I definitely agree. I guess you could add a tag for 3rd attempt or something to see if you really want to try a 3rd time, but I would say more often than not, like it's definitely like 1 or 2 is probably a good amounts to look at. And I think this is mostly only going to be applicable if you're using like low time frames where you're using actually pretty tight stop losses for most of these, and sometimes you'll just you'll get nicked out before the actual move happens, so a second attempt could be worth it. But yeah, you have to backtest to really find that out. So we had a really nice AMD here, and we've got several hours left in New York session. Let's see kind of if we get additional price action. So there's only like 3 candles that consolidated here, so I probably wouldn't say, yeah, this is accumulation. Like I would probably be like, cheating if I did that. So I personally wouldn't have traded this leg right here. Maybe if I was on the lower time frames, 15 seconds or 30 seconds, you could see more candles accumulating here and a manipulation distribution. But for the 1 minute time frame, like you can see most of these accumulation phases take a little bit of time. So I personally wouldn't like look to see these few candles here as a accumulation. So let's see if we get any price action that we're interested in. So potentially have a range here. I'm kind of seeing price respecting this low right here. We have a potential zone right here. Kind of the price is kind of hanging around in for a while. So we'll say this is a potential accumulation, and we have a move to the upside. So let's see if we got swift reclaim back into it, which we did. So potential manipulation phase right here. which I'll mark out with the manipulation. Do we have a fair value gap in here? We have one, but it's pretty high up here. So kind of the rule of thumb I would say for using inverse fair value gaps is you want price to close back inside the accumulation zone. Otherwise, this fair value gap already inverted, still during the manipulation phase, but you need to see price kind of revert back inside the accumulation zone to see this as an actual potential manipulation. So I personally I think it's probably lower probability to trade the most extreme fair value gap in this case. It might be better to just do the box setup in this case. There is a fair value gap down here, but we can get a better entry just using kind of a retest of this high with the box setup. So that's probably what I'll use for this one. So I'm just going to look at this high we had for accumulation range as our entry. I'm going to use the high of this manipulation, or I need a short here, not a long. So the high was right here. So I'm looking for a retest of that level. And yeah, Matty again, for additional confluences, if you look for SMT divergence between correlated assets, that's also another great confluence to consider for these. If you look at multiple pairs, 100% would be something you could look at. It just complicates things, obviously. And with any confluences, you have to kind of weigh the pros and cons. Does this add more benefit? Then it complicates things. But if you're good at seeing that stuff, then could definitely add confluence for well. So the standard deviation for this one is actually going to be pretty large. We kind of had a bunch of green candles here, so there wasn't any local low along this way. So I really kind of have to mark out this entire leg. Unless I guess technically the extreme of this manipulation wasn't until this wick. So if you wanted to get cute, you could potentially just use kind of this most recent level, but you're definitely going to have to target 4 standard deviations to get anything with that, which I think lines up with about 2.35 hours. So we can do that. I would say in general, probably a good rule of thumb for the standard deviation measurement is look for the most extreme wick of the manipulation leg, and then look for whatever high or low preceded that. And then LRLR is another concept, low resistance liquidity, aka trendline liquidity. So if you think about it, all of these kind of lows here are going to be places where a lot of people are going to put kind of obvious stop losses. They want to see, we are potentially in an uptrend here, and they're if we get a break of this structure, then I'm out. We've kind of shifted order flow. And so you're going to see kind of all of these lows here. There's going to be resting stop losses. And the concept of LRLR, or low resistance liquidity, is essentially if you have kind of trendline liquidity in favor of the trade you're taking, it can potentially help accelerate it to your take profit levels. So after this level is hit, you might hit some stop losses and kind of push price lower, and it could potentially cascade to the other ones as well. And so this is another potential confluence you can look for kind of trades in your favor to see, are there a bunch of potential stop losses that could help kind of add fuel to the trade moving in my direction. So another concept for you guys. But yeah, let's go ahead and take this trade. So this is going to be intra trigger number 2. So this is the box setup that I showed you guys. Basically, we came back into the accumulation zone. We're just going to look to enter on a retest of the range and then look for that distribution phase. So enter trigger 2, and then what is this going to be? This looks like this is a potential it's a low time frame reversal but a higher time frame continuation. So a little subjective. I would say higher time frame probably trumps lower time frame, so I would probably say this is a continuation. But obviously you can see here on the left we did sweep this internal high. So it's again, it's a low time frame reversal, but I would say on the higher time frame we've been trending down for a while, so I would generally classify this as a continuation. So I'll save, and let's see how this one played out. So we got tagged in, and unfortunately this one was a loss. So I think it's really good information to get these the analytics between the box setup and the inverse fair value gap. I have a feeling the inverse fair value gap entries are going to be better because as you can see here, we basically respected this fair value gap down here. So if you were only trading the inverse fair value gap entry and you waited for this to invert, that would give higher probability to your trade. So we've still got a few hours left in New York session. Let's see if we get any other accumulations. Kind of price just trending to the upside right now, which is fine. Not really anything to look for at the moment. All right, fairly large potential accumulation range here from this low to this high. So you can kind of see prices like chopping around in this range right here. So templates, accumulation. Let's see if we get some manipulation either side of this for a potential long or short. Still kind of chopping around in it. I definitely wouldn't classify this as manipulation. Like it did close like a tiny bit lower, but you need to see something more substantial than that, I would say. And so I'll probably just kind of edit my zone just slightly to include that body in this entire accumulation zone. We're kind of in the afternoon now, so a little lower volume and volatility, but we have now broken out of this range, but we're not really getting that immediate reaction to it until right about here. So we have fair value gap right here that we could potentially look at. Oops, let me draw that correctly. So there's a fair value gap right there. We can kind of classify this entire potential range as manipulation leg. Templates, manipulation. I'm just curious. We did take these relatively equal highs over here. So this is going to be classified as a reversal. Because as you can see over here on the left, there was a draw on liquidity from these relative equal highs that we have now swept. We've kind of gone above, and now we're seeing a swift reaction to the downside. I'm going to need to replay back a couple candles because we inverted this fair value gap all the way back here. Replay to the states. All right. So we've inverted this fair value gap, and now I'm going to look to enter on a retest of it with a stop loss at the high of the manipulation leg. And for my standard deviations, the most extreme high was right here. So again, using kind of the same measurements we've been going off before, I'm just going to use the low that preceded that extreme of the manipulation leg. And you can play around with this a little bit if you want. Maybe maybe the low has to be like starting in the accumulation phase versus not, but just to keep things as standard as possible. So in this case, you could see pretty clearly this draw was higher. So maybe that could be a reason not to take this earlier short we had in the day. You can look at all kinds of different things. And yeah, happy to help with the export. There's a lot of hidden features with FX Replay that people don't know about. So the only way you find out is asking questions, and people like me that have been using it for over a year at this point. I've used pretty much everything that's out there. So happy to help answer any questions either on these streams or in the Discord. If you have questions, feel free to ask. So I think that's probably going to be it for this session. We've taken 4 trades in the session. We had 1 loss, second attempt was a win, a loss here and a win. So overall, nice profits on the day. So I'm probably happy with that, even if there's anything lost like 30 minutes. I'm not too worried about that. Potentially have an accumulation zone here. The price has been kind of chopping around in for a while, so we'll mark that out. Template, accumulation, but we need to see a swift reversal back into it, which we got. So again, this is early New York session, so I would just off the bat say like this may be a little lower probability just because it's like the first 3 minutes in New York Open, but it matches the criteria that we're looking for. We have kind of sideways accumulation here, swift manipulation and rejection back inside of it, so we can kind of say this is a potential manipulation leg. And on this move we had a fair value gap that was inverted, so everything lines up for the strategy. So we'll go ahead and give this one a shot on a retest of this fair value gap, stop at the high, and we'll project out from this kind of low for potential targets down here. I am seeing it's not quite relative equal lows. If this was like the exact same, I would say, but it does kind of line up. If you looked at a higher time frame, kind of this low and this low would be relative equal lows. So I think that's potential confluence for this. But let's see, what can we get for 2R? So we have to go for the 4 standard deviations in this case, because the 2 standard deviations only gives us 1.2R. And I got a question here. Okay, is there any way to see insights on your milestones of using FX Replay in the past? I think my personal experience is like I've gotten better at backtesting. Like I'm a lot more efficient at seeing things and actually like clicking the buttons. That's just like more practice. But I think generally like something that most of you will see when you're backtesting is kind of your first time through a strategy. You'll probably make quite a few mistakes, and that's why I recommend like auditing it and everything like that. But after you get that like larger sample size from backtesting, like 100, 200 trades for a strategy, you'll get a lot better at identifying and executing it more efficiently. So I think that's just as important as collecting the data from doing the backtest. Like building the repetitions to better identify and execute it is just as valuable, because like, when you're on the live market, like you can't you have to be able to identify it, see it, and execute it, and have the data to back it up. And so I think that's like another reason that backtesting is so beneficial, is it kind of trains you to like see these models more clearly from kind of doing the larger repetitions. But I think that's probably the biggest improvements. And then probably a secondary thing that I would say is these extra confluences. Like as you learn more, as you watch these videos, even if you aren't trading this strategy, like the little snippets that we do on education for different concepts, SMT divergence, low resistance liquidity, jaws on liquidity, like these confluences can add can only increase your win rates. So if you have a strategy that's is producing good results, but you want to increase that win rate, then something you can consider is maybe there's 2 or 3 confluences you look for, and you need there at least to be like 1 or 2 in favor with the strategy. Otherwise, you don't take it, and you can kind of run optimizations to see if that improves results or not. So hopefully this is all just like helpful for you guys, even if you aren't trading this specific strategy. So we have a potential fair value gap retracement here. We'll place an order. This is going to be entry trigger number 1, and I believe maybe slight reversal. I have to check this high actually. So the high was in 17,769. So kind of similar case as before. The only thing you consider here is we didn't sweep this kind of overnight high. And if you're looking for SMT divergence, there may be maybe you saw the ES, the S&P, or the Dow, YM. Maybe they swept this high and New York didn't, so that could be potential SMT divergence. That could kind of classify this as a reversal. But I would say in general, like even the local time frame, we've been trending to the upside. So I'm gonna say this is a reversal even if we didn't sweep this high, because the overall we're kind of going against the local trend as well. So we'll classify. I think I lost my order dialog, but I'll come here, place the order. We're doing entry trigger number 1, and we'll say this is a reversal. Let's see how this one played out. And I'm just going to go to the close for this one. Go to position closed. Nice. I really like that go to position close. I just found out of that a couple weeks ago. So really nice trade right here. We got tagged in. And pretty much as soon as this fair value gap inverted, there was a very brief retest of it. So you do have to be fairly quick with these entries. But the nice thing is you could potentially like just set an alert on the low of this fair value gap, and like once that gets hit, you're like, okay, like there's a potential fair value gap inversion, and all you got to do is wait for the candle to close, and you could already have your position in place already. And yeah, potentially we could include the go-to up here, but it's kind of trade specific, so I think that's why they put it in the open positions down here. Pretty much everything else you can find in all these go-to configurations at the top. So yeah, nice 3.48 hour win to start this session. The strategy is actually kind of killing it. This just a few days we've done. I think we've probably had pretty trendy price action during this time frame we've been testing. So maybe in a choppier environment it doesn't do quite as well. But let's continue to see what we're getting. So potential accumulation zone right here. We've kind of been going up and down, and I guess like this is again kind of just visually what I'm seeing, but if you start to see like price respecting, I guess doing like a double top or a double bottom, that could potentially help you identify those accumulation zones as well. Oh, I forgot to jar this nice distribution right here, template distribution. If you start to see price making like a double top or a double bottom, that can help you like identify the potential accumulation zones too, at least like the larger ones. Templates, accumulation. And we'll let's see if we get a manipulation either side. Not yet. We're still kind of chopping around. Again, not like any significant deviation here. I would want to see a pretty strong move up and down. We're kind of still just ranging, I'd say, within this section. And now we're starting to see move to the downside. So let's see if we move back up, which we do eventually. It took a while. So this, you could potentially, it wasn't as quick as I would like. And this is also a potential thing if you start to see with larger sample sizes, at least like on this time frame, like if the manipulation doesn't quickly return, then maybe that's not a trade that you're interested in. We're still like kind of like on the 5-minute time frame, you're probably seeing a wick right here between these 3 candles. So we haven't really like, significantly reclaimed back into it. So I think in general, it's probably going to be best with this strategy if you look for those quick kind of manipulations and back in, because that's essentially you're looking for liquidity to be taken and then kind of price to resume in the direction you want. So I'm not gonna take this one. Let's actually just go ahead and take a look at analytics. I realize we're already 50 minutes in. So 62.5% win rates. Again, only 8 trade sample size. So as you get larger number of trades, you'll start to see more smooth. You at least want to see a more smooth equity curve. But like I'm very happy with this. Like 13.8 R in 8 trades is honestly pretty amazing. Average of 3.36. We did have that one trade that got up like almost 1.8 R and reverted back on us. But overall, yeah, I think this strategy has promise. I mean, the unicorn model as well was pretty profitable when we were testing, and this is again pretty similar to that. So I think either of them could show promise. Just to show you guys kind of why I added those tags, we have the ability up here to filter on continuations only. As you get bigger sample size, you'll be able to see better information again. But I think it's helpful to add anything that you want deep dives in the analytics without having to do the export. I think tags can be really helpful, and I like to just use like entry trigger 1, 2, 3. So if you're testing all kinds of different strategies, it's easy to reuse those tags. If you use like FVG retest, or if you use like language specific to each strategy, you're going to have like a ton of tags. So for different entry models, I think just using like entry trigger 1, 2, 3 and just kind of marking down what those are is probably best. But for stuff like continuations versus reversals or anything else that you want to specify, you can kind of do that, and you can do that from your account page. You just go in the account settings and it's in the journal tab. You can create new tags. But yeah, you can see the breakdown be buys and sells, win rate by session. Again, we were only trading New York session, so not really a ton of information in there. But yeah, same thing. I got to filter this by New York time frame. That might help. So let's go to New York here. Apply filter. So yeah, now our hourly results should start at 9 and go till kind of like 3 o'clock in the afternoon was last day. So you can kind of see the results kind of by session, and yeah, again 13.8 R in just the few days we tested was pretty good. So yeah, let me know if there's any other questions you guys have, but this seems like a pretty promising strategy. Hopefully it was helpful for you guys, and yeah, I'll talk to you later. See you guys.